Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously. Create dozens of quick lists. Display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Tuesday, April 14, 2015. The question bar is open, folks. If ever you have any questions, feel free to ask them. Today we have a market situation where markets are, I would say, flat. They're pursuing their yesterday's decline on the American markets. And the Dow Jones, we have a resuming of the bullish momentum. And on the TSX, we stay flat as well. But however, when we take a look overall at all those market situations, there are still some sectors that are standing out, and this is what this show is going to focus on. But before we take a look at the specific sectors, let's see what happens throughout the news. First of all, Greece said today that if they cannot reach an agreement with their international creditors, the IMF or the Eurozone, that they will default on their debt and they will withhold the $2.5 billion that they owe to the IMF. Should have this created some fear among gold? Yes, it should have, but it didn't actually. We had also the retail sales data that came out today in the US, negative, and the earnings season has started with some major caps such as Wells Fargo, JP Morgan, Johnson & Johnson, all of them, they beat estimates. So this is actually a good thing, but can those big caps lead the way and others will follow their great performance and the earnings seasons that is actually starting just today? Now, let's take a look at the market situation. Let's focus on the sectors. Let's start first of all with the American markets, where the NASDAQ is having a slight correction here, staying within a slight neutral formation. First of all, the fact that the NASDAQ went down at opening is because of Google, though. Google is in a clear breakdown today, broke down that support. It's rebounding slightly, but Google was the main responsible for that. Now let's also take a look at the healthcare stocks. I've talked to you about this. We published a movement on MarketGurus.tv on the healthcare sector. We were reluctant to recommend any positions on the sector because throughout the day yesterday, while markets went down, and if markets went down, we were not going to recommend any long positions. But if you had MarketGurus.tv or if you opened some positions on the healthcare stocks, well, on most of them, you can continue to hold on to those positions. For instance, here we have Seconom that broke out yesterday. That pursues its rally. Zogenix as well. TG Therapeutics, Chimerix, Receptel. So those stocks are all pursuing their increase slightly. And I think that if you bought some positions yesterday on the healthcare or the biotech stocks on the NASDAQ yesterday, whenever you make a 5-6% on those positions, though, be quick to take some profit. That's a strategy that you should favor. The other movement that we have that is actually on the downside today is the movement in the railroads, because we have Norfolk Southern. What they announced is that they announced that their earnings are going to be really negative. They're going to be around $1 per share, and analysts were expecting $1.25. And when a railway company says that they're going to have weak earnings, of course, all the railway stocks are being impacted because all of them do the same business and they're impacted by almost the same factors. So the fact that Norfolk Southern is clearly breaking down, reversing an important upward trend of 2013 and 2014 is negative for the healthcare for the industrial sector. So you have some stocks like Union Pacific as well that are going down, CSX Corp, Kansas City. So investors are expecting also weak earnings from all those major railway stocks because Norfolk Southern declared that they will have weakest earnings compared to estimates. So this has been a sector that has bring the American markets further down. On the TSX, what we do have the TSX that's able to remain neutral. There's a particular sector that's interesting. Last week, I made a YouTube Chronicle saying that you should hold on to your positions in the energy sector. Well, today we have oil that is on the verge of breaking out. The energy sector is on the verge also of starting a bullish cycle if it does break 235. We're close to that. We're only at 234.48 points. And the energy sector, though, there are some stocks that are already breaking out, such as Freehold Royalties, Meg Energy could break out. A stock like Trinidad Drilling could break out as well. Insight Energy Services could break out higher than $11. A stock like Canadian Natural Resources could break out also higher than $41.33. So here, this is the list. All those stocks you see that are highlighted with an S are all stocks that should be watched that could start a breakout on the energy sector. And later in the show, I'm going to show you the list of the best breakouts and breakdowns of the day, but mostly breakouts. And you're going to see on the US as well as the TSX, most of the bullish signals are on the energy sector where some stocks are actually taking off. So also, I'm going to take a look at the energy stocks later, but I want to also mention here there's some stocks in the steel sector that could be watched for swing trading. We have commercial metals that could break out higher than 1650. Steel Dynamics could break out. I want to see more momentum on a stock like that, higher than 21. Also, AK Steel could break out as well. I want to see the stock going slightly higher than 480.77 to confirm a clear, solid breakout on AKS. So watch your steel stocks. Watch also some stocks in the energy sector. Those stocks are the ones where we could have additional breakouts. Now let's take a look here at some questions that we have. We have one from Andre. It was from yesterday. Mizzy Holding, is it a good time to get in? I was looking at the stock, at the question. I was like, why would you consider to get into a stock like that? Because we had a sideways formation here. We broke it down, and the stock is still maintaining its downward trend. But by taking a deeper look at this, I found that, yeah, you're right. There's a lot of congestion there with all the moving average, the 200-day, the 50-day, the 100-day moving average are all around this area. So it's a good thing. However, for MZI Holding, though, the thing is, I'm not convinced yet that buyers are at the rendezvous. I'd like to see the stochastics around the 40% range. I'd like to see a clearer MACD starting to get towards the overbought situation as well. And I also like to see the reversal of this downward trend. So as long as MZI on TSX Venture doesn't go above 20 cents, because at 20 cents, we will reverse this downward trend, I think it's definitely not a go, because you cannot consider those 2 days as a stabilization phase on Mezzi Holding. However, you should be watched, and I think if ever it could remain around 17 cents 20, which corresponds to the 200-day, 50-day moving average, and below 20 cents, stabilize for 2-3 days, and then reverse that downward trend higher than 20 cents, that would be the go. But I need to see a confirmation with the histogram, 728.7, heading towards the overbought situation, and also with the 933 stochastics towards the 30% range to confirm an entry point on MZY on the TSX. Now, this question was from yesterday. Is it time to buy energy stocks? Well, there are some breakouts on the energy sector, Wheezy. Here I'm going to show you the list. Let's take a look at this. So this is the list. Oops. This is the list of the best breakouts and breakdowns that we have throughout the markets. And you see most of those stocks on the energy sector. So in the US, the breakouts are really interesting. There's SDRL, CVE, Enter Resources, and the TSX is Meg Energy. We also saw FRU, but FRU, the only thing I didn't like with FRU is the fact that if we take a look at this, we're just testing the 100-day moving average. I don't know if it's enough to allow that stock to pursue its rally. So this is the thing I don't really like. Also on FRU, there's still that downward trend that is there. So there's a risk that we might just test it and stabilize. So this is the thing I don't like with FRU. This is why I prefer a stock like Meg Energy, which definitely has more upward momentum, and at least until what, 24.48, you still have a 5 or 6% percentage on Meg Energy, because that corresponds to a small top on Meg Energy. So Meg Energy is one of my favorite in the TSX, and other stocks here are also breaking out. So is it time to get into energy stocks? On some of them, yes, it's time. Now, there was a question from yesterday. We had to write it down because there was some technical difficulty there. So one wants to buy BlackBerry or IAG. AIG. Industrial Alliance. What's the ticker of Industrial? Okay, it's this one here. So you want to buy BlackBerry or Industrial Alliance for the long term. So BlackBerry for the long term, why? If you are for the long term, now you have to take a look at the fundamental factors that are playing in favor and against BlackBerry. Okay, the company is starting to focus more towards providing security services to companies. Have they made some progress there? Yes, they have done so. They have been able to make more integration with other devices, which is a good thing. But it's a tough market. Apple is getting into that business as well. I think Android also is getting into that business. And so far, we cannot say if BlackBerry is a leader. Their smartphone segment, only Indonesia, where they made a recent launch, has been slightly successful. But on the Canadian side, there's still nothing yet. So I'm going to get with more explanation in the next segment after the break.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
So welcome back, folks. So as I was saying, BlackBerry, though, technically now, as I said, the positive side is that they're being more focused, but the negative side is that they're not a leader in the security device department, and their smartphone sales are not that great. Their recent earnings release was okay. They didn't make a loss, but in terms of their sales, we have not seen a big growth in their sales. They're becoming more efficient, which is a good thing, but their sales are not growing as much. So the turnaround plan of Mr. Chen could play out well, but it's going to take time. Technically speaking now, if we get into BlackBerry, the thing is, as long as the stock, if you're buying that stock within that sideways formation, it's still a good thing, but $11 is your exit point, because at $11, this is where the stock, oops, man. Okay, this is when the stock totally breaks that support. So long-term BlackBerry, $11 as an exit point if you're getting in right now, but you also have to see how the next earnings seasons are going to play out. Can their sales grow? Can they actually continue to get more clients in their security department, because that's where the focus is right now. So those are the things that you also need to take into account on BlackBerry if you're in for the long term. You have to make your homework there. Now for AIG, I don't know much about AIG. For me, AIG remains neutral. It's an insurance stocks. I don't know what their dividend payout is. If you buy that stock, for me, you just collect the dividends, right? The insurance sector is a sector that can continue to do well in the low interest rate environment. But when is the Fed going to raise interest rate? This is something that will impact them negatively. So those are the things you have to take into account on AIG. You could collect their premium, I think, on a stock like that, collect the dividends on the premium, the dividends, and buy that stock. And as long as it remains above 40.23, which corresponds to that important support, you hold on to it. But if it goes below that, you get out of AIG. That would be my only advice I could give you on a stock like that if you're in for the long term. But you also have to see when the Fed is going to raise interest rate. We know it's not likely sooner, but it will happen eventually during this year or at the beginning of next year. And if it does, well, insurance companies are going to take a hit. This is why at 40.23, get out on AIG. Now, Paul has a question here. He bought MBX here. Okay, so Paul bought MBX through the downturn for pipeline news. Should I close my positions on MBX? Can you analyze and advise, please? Well, MBX, Paul, you bought at 63 cents, right? On the breakout, like I think you had a great entry point. Now, should you close that positions? No, I don't think so. I think this is an important support on MBX, right? At 50 cents. So for me, as long as the stocks can stay at 50 cents, you should hold on to it, right? Above 50 cents for MBX. I don't think you should close it. We have reached an oversold situation, so we might have a wave of buyers that could come in for MBX. It might be frustrating because right now we have the 10-day, which is in red, that's below the 30-day moving average, which is in yellow, which is not a positive thing. But there's still that support at 50 cents where investors are reluctant to let the stock go further down. Yeah, for me, 50 cents will be the point where you're going to have to get out totally of that positions. And usually, when you want to buy a stock that's breaking out, it was a great breakout. But also take a look at what we have found in Market Gurus TV is that the higher probability of success that we have when we recommend a stock as a buy in our analyst choice is usually when the 10-day moving average is above the 30-day moving average. So you bought it in the breakout, yes, but the 10-day, which is in red, was still below the 30-day moving average. So that's something that you also have to take into account. There are also other factors such as the stochastics, MACD that we're also looking at. But for me, just the fact that the 10-day was not above the 30-day moving average was for me not a quality buying signal. But if it remains above 50 cents, there's no reason to get rid of that positions, Paul. About what price to enter into SG to avoid a false signal? Oh, okay. Well, what you should do is take a look intraday wise, right? If you see that during the day the stock goes below 39.75, that will be a clear false signal. If it can remain above 39.75, that could be actually the pursuit of the bullish cycle. And SG, it's not a breakout because the stock has been going up for 2-3 days, but you will trend trade that stock, meaning that if it remains above 39.75 for the day, you're getting into it, and your exit point becomes now at 39 whenever the stock reverses this upward trend on Stella-Jones. I think the company had a lot of good earnings recently, if I remember right. Yeah, so you're trend trading Stella-Jones, and it has to remain above 39.75 for the day to confirm that it's not a false rally for today. Now, as for the day trade of the day, it's that stock here, SPHS. Oof, a big profit-taking opportunity had come, but that stock was active, and now it's becoming less attractive. So you had 2 entry points on a stock like that. Possibility to take some profit here. If you bought in here, possibility to take some profit there. But right now, not so interesting. Only on the reversal of this downward trend that the stock will be interesting. So if the stock kind of goes above 99 cents, that will be the new entry point, but not below that. So sometimes it does pay off, sometimes it's not as interesting, but that was interesting before 11:30. That was our best pick on MarketGurus.tv. To make a follow-up today, folks, on the TSX, there's the energy sector where we do have some breakouts. Also in the US as well, it's a sector that is standing out. We will publish a list on MarketGurus.tv of the best breakouts on the energy sector. You can make a free trial of MarketGurus.tv for free for 10 days to have access to that list. Also, on the American side, the movement that we had among healthcare stocks yesterday, some of them are continuing to go up, some of them not, but at least all of them are maintaining the upward trend. So if you bought some positions, be quick to take some profits on those positions. That's important. And for the best day trading picks today, well, it was SPHS. It's not paying off right now, but if ever we have a resuming of the bullish momentum on the markets, that could happen. And the earnings season will continue, folks. Good earnings from Wells Fargo, Johnson & Johnson today. Let's hope that this trend could continue throughout this week. And if it does, though, we have positive economic indicators, we could have markets that go up again slightly higher, and that will allow us to take some profit on the positions that we bought either today or last week. So that said, see you tomorrow on the Swing Trading Show on DecisionPlus.com.